Hey, this is Stuart Grazier, and I am doing a quick presentation on one of our briefings we did at local Naples, Italy Officer Real Estate Investment Club, which is a chapter of the Military Officer Real Estate Investment Club, the Moric.com. Today we're going to talk about private money lending, and the reason I like private money lending is it's somewhat hassle-free, and it's quite a passive investment opportunity. So we'll go through this. So the idea is you're basically the bank. You're lending money to other investors for a promised return on your money. And there could be a numerous types of loans that you can do. You can do rehab loans, bridge loans, or offer money just for single family rentals. Even you could do new build construction loans, commercial loans, or even business startups for investors. So why lend money? You're basically allowing your money to work for you. You're typically going to get quite a bit higher of a return than you would in the stock market or any type of savings account, CD, or bonds. So, if you're having money just sitting in the bank, it's much better to lend that money out for shorter periods of time and get a higher interest rate. Typically, you're looking at 8 to 12% interest. The other good thing is it's secured by real estate, so there's actually some collateral in the deal. You can either be in a first position lien, which means if you had to foreclose for some reason, you could take ownership of the property. Or in some cases, you could be the second position lien. And there's security instruments. You actually get a deed of trust or a mortgage, depending on what state you're in, first or second position. Or you could get just a promissory note, and that's it could be backed by personal guarantee from the investor you're loaning to. Additionally, maybe you could be a member of an LLC, and then that LLC owns the property, and you'd be like a percentage ownership of that LLC. Or you could do a syndication where either you or your LLC could be a part owner of a big property, kind of like a big apartment complex or something like that. And then you could do a joint venture as well, where you do a 50-50 split or an equity share. So pros with being a private money lender, like I said earlier, it's hassle-free, and you have solid cash flow. You don't have to deal with tenants or toilets or contractors, late night phone calls. Really, you just lend the money out, and then you watch the cash flow come in. It's secured by physical property, and like we said earlier, you have higher returns than you would in the stock market or in a bank. And you have more control of your money. You're actually telling where your money will go to earn that higher interest rate. Generally, they're shorter term deals. Typically, you can do 6 months to a year, to maybe a couple years. And then that could lead to more deals if you create a relationship with investors and they're doing multiple deals a year, and you can start lending on those. That just creates solid cash flow for you, and it's somewhat liquid. It's shorter term deals, so if you need to get out in 6 months, then you wait for that balloon period to come to fruition, and then you get out. So some cons with private money lending. It might be viewed as higher risk, but it depends on the security instrument that it's used, and also depends on the investor that you're working with. You need to make sure that you're trusting the investor that you're working with and they have solid reputation. A first lien mortgage at 75% loan to value. It's probably going to be looked at as a pretty low risk, but maybe a promissory note on a bridge loan, or maybe just a personal loan to somebody could be considered higher risk. You do have the potential for having to foreclose on a property and take legal action to get your money back. So there is some steps you'd have to take. So that could be looked at as higher risk. There's not many tax write-offs with private money lending. There's short-term gains, so you have that higher tax rate. There's not much you can write off on your taxes like you would if you were actually owning a physical property. And you're really reliant on the performance of the other investors. You're trusting them to do well with your money. And then there are some SEC guidelines that you have to consider. So where to find deals? Really, probably the biggest one is your local real estate clubs. You can go to Moric.com. There's plenty of opportunities there of guys doing real estate, doing flips, looking for loans. You can go to other investor websites. Bigger Pockets is a big one, or just your local real Estate Investment Club website, or just within your own network. If you just kind of tell people what you do, give them just your quick elevator pitch, say you're a real estate investor and you're looking to loan some money, and I guarantee you can probably find some deals. So just a few things to look at before you actually loan your money out. Make sure you know what the market value of the property is. Make sure you know what your borrower's credit is like and the equity of the deal. And then also you need to make sure that the borrower has some type of experience. If there's any additional collateral, you might want to put that into effect. And make sure you know what lien priority you are, either first or second position. And make sure you know what the investor's strategy is and their exit strategy. Make sure you're doing all of your due diligence. You can trust the person, but definitely you need to verify. So general guidelines for doing private money loans: absolutely use a title company or an attorney. Make sure you're seeing the purchase and sales agreement and the HUD statement. Make sure you're getting the title report to make sure that the title is free and clear. And you want to make sure that that investor has insurance on the property that you're lending. And make sure that you're getting the mortgage or the deed of trust. You actually want the physical copy or the original of the mortgage and deed of trust with your name on it or your company's name on it. And ensure it's recorded at the county courthouse. And have the original and keep it on file. Or make sure you have the private placement memorandum. And this is for a syndication or a percent ownership of an LLC with a big deal like an apartment complex. There are some SEC guidelines. We're not going to dig into all those because it would be its own presentation in itself. But the SEC requires that investors receive financial and other significant information concerning securities being offered for the public sale. And the securities must be registered with the state. But there is a regulation, the Regulation D, as a private placement memorandum, that it doesn't have to be registered. So make sure that before you're investing with people, you're getting that private placement memorandum, and make sure you're following all the guidelines that are set forth in within the SEC. So here's just a quick example of one that I lended on. Give a shout out to Blackjack Real Estate in Pensacola, Florida. This is a deal that I did with them, and I found this deal through themariac.com. 157 Mirabelle Cir in Pensacola, Florida. Their purchase price was $85,000, and they had about $1,500 to $2,000 in closing costs, and they expected $2,000 to $5,000 of rehab. And the market value of the house was $150,000. So Blackjack Real Estate offered a $95,000 loan, which was 63% loan to value, and the term was a 6-month balloon, 12% per annual interest, and it was a first position mortgage. So for me, this was a great deal because I had some money just sitting in the bank doing nothing, earning less than 1% interest in the bank, and this was a short-term deal that turned out to be a really good deal for me. And also it helped out Bill Allen at Pensacola at Blackjack Real Estate, helped him out with not having to go to a bank and get a loan elsewhere. So here's some other resources. Obviously, go to themariac.com. Ask questions on our discussion board. Look for investment opportunities. But here's some other articles that I found interesting when I was doing my own research on private money lending. FortuneBuilders.com has a good one. PrivateMoneyLending.guy.com. And then also, most important is the SEC. There's a ton of information on the SEC. Look for private placement memorandums and read all about that there. Okay, hope that was helpful. And again, if you have any questions, go to themariac.com and post something on our discussion board. Thanks.